Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets start the week on a subdued note. Nifty hovers around 10,800. Broader markets outperform. OPEC members and its allies decide to hike oil production by 1 million barrels a day. Shares of Idea Cellular fall the most in over 3 weeks after Idea-Vodafone merger hits a roadblock as the DOT looks to demand 4,700 crore. And after a week-long pause, Mumbai continues to receive showers through the weekend, resulting in waterlogging and traffic jams. We'll get to all of that, but first, the markets. It's been a subdued start to the week, much like the weather. Neeraj is here, as always.
Yeah, well, much like the weather indeed. Thanks, Arja. Thanks for that. But yeah, a subdued start, a clutch of factors, of course. Auto and auto-related names aren't doing the best. So if you just look at the volumes today too, the volumes on an expiry week, it'll come up on your screen. It's an expiry week, but the cash market volumes are much lower, just about 13,500 crores done at this time around, which probably gives you an indication that we'll do somewhere around 25,000 crores on the NSE cash, which is fairly low compared to what standards are. The F&O volumes will be higher because it's expiry week. Tata Motors, the Tamo twins actually, both the DVR and Tata Motors are down about 4% apiece after the JLR meet failed to evoke any kind of positive statements, and therefore that stock trading at the lowest point of the day. OMCs were under a bit of a grind as well. Crude prices not really falling dramatically, stabilized today. They jumped about 3 or 4% in Friday's session. So BP, HP, IOC took it not on the chin really, but down in the session today. So that's a set of stocks which didn't do too well. What's done very well? One, the Bajaj twins, so Bajaj Finserv, Bajaj Finance, the juggernaut continues. And then if you just look at the slightly broader end of the spectrum, Page Industries, expensive as it is, up 4%, and that's nudging new highs, 28,000 for Page Industries. Wow. In the session today. And just look at what it's done in the last 1 month, 3 months, 6 months. Some seriously good returns that have come in for Page Industries. So Page, Bajaj Finance, Bajaj Finserv, all of them trading at life highs for themselves. And just lastly, 2 stocks need to be monitored. One is PNB Housing Finance. There's news reports about how HDFC or Kotak might be eyeing stake there, and that stock is up about 11%, fairly decent volumes as well. PNB, of course, remember, has not kind of hidden that they don't want to. So 2.5 million shares, the stock is up about 12%. And on the flip side, KRBL, and this whole talk of there being some bit of doubts about the books, etc. KRBL is plunged now 18%, 4.5 million shares. I tell you, one thing that the market doesn't like right now is even a hint of some bit of corporate governance issues. Stocks are just getting punished, and this one is no different.
Neeraj, thank you so much for that. That's the markets. Oil prices, meanwhile, have stabilized after jumping 5% on Friday. OPEC adopted a production hike of 1 million barrels per day, breaking from the time-honored tradition. OPEC committed to boost output without saying which countries would increase or by how much. This gives Saudi Arabia the flexibility to respond to disruptions at a time when the United States sanctions on Iran and Venezuela threaten the oil market. Saudi Energy Minister Khalid Al-Falih said responsibility to increase production now falls squarely on the country's shoulders. Listen.
There will be indirectly a reallocation of cuts, and I think the JMMC's focus, rather than on adherence to certain specific numbers per country, is going to be to stay within the 100%, not to overshoot in a way that will hurt the market by oversupplying crude oil, but at the same time not to be overly strict and putting a pro rata cap on each country that doesn't allow us to get close to the 1 million. So the exact allocation on a country by country for those who can will be the job of the JMMC to discuss. Some of it will depend on available capacity, which we need to have an honest discussion about who can do what. But we, as Saudi Arabia, obviously can deliver as much as the market would need, but we're going to be respectful of the 1 million barrel cap and at the same time be respectful of allocating some of that to countries that can deliver it, and that will take place in the next few days and weeks as we open that dialogue and allow the GMMC to do that allocation.
That's the view of Saudi Arabia. Iran, meanwhile, continued to differ with Saudi Arabia in an exclusive interview with Bloomberg's Anne-Marie Hoden. Oil Minister Bijan Namdar lashed out against Donald Trump's demand for higher production, said it goes against the fundamentals of the oil market and that it will be against the OPEC members' interests to follow the instructions from the United States.
I believe we have overcompliance from Saudi Arabia, from Qatar, and some other countries, a little. They can produce more, and for Venezuela, if they can produce more, we have no difficulty, can send more oil to the market.
Can other countries pick up some of the production lost from Venezuela?
No.
This increase, or as you're describing it, decrease of the cuts. What do you make of that? Do you think this was a victory for the Saudis?
Officially, they didn't say so. But based on the reports that we receive, these are pressure on the OPEC and maybe some OPEC member countries. It's a strange thing for me that President Trump put pressure on some OPEC member countries to limit their production and impose the sanction against them like Iran. And at that situation, wants OPEC to remedy its action against the market, because I believe that President Trump is doing against the market fundamentals, against the market, against the free market, and it's not on benefit of the even consumers at the high level price caused by the action of President Trump.
Speaking of President Trump, following this meeting, he tweeted yet again about OPEC and high oil prices.
Yes.
What's your response to him?
I think OPEC shows that it's an independent organization, not part of the Secretary of Energy of United States, and it's very bad for United States and OPEC members to follow the instruction of United States.
That's a view from Iran. Oil marketing companies back home in India continue to be the laggards of trade today as prices of oil hovered around $75 a barrel. Part of the reason is individual countries are yet to announce how much they'll hike production. G. Ramaswamy, Director of Finance at HPCL, however, expects to maintain marketing margins. He says fall in Singapore with GRMs to the contraction of gasoline and naphtha cracks. Listen in.
We need to understand the meeting outcome of a recent OPEC from the position of November 2016 meeting, where basically OPEC and non-OPEC countries together agreed for a reduction of 1.8 million barrels per day earlier in November 2016, which due to certain non-compliance has gone up to as high as 152% for OPEC and about 158% 152% for OPEC countries and non-OPEC countries as well. Now that commitment to comply with that 1 million barrels cut is now trying to put certain additional 1 million barrels per day of oil into the system. And that's how, basically, if you look at it, it's nothing but a reiteration of November 2016 commitments which has been given to stick to the 1.8 million barrels per day type of reduction.
Right.
Which has gone beyond that, and they are restoring back to 1.8 million barrels, and which is actually putting.
No, Mr. Ramaswamy.
Yeah.
Mr. Ramaswamy, allow me to come in. So the question really from anybody who's listening into this conversation right now would be, where does HPCL, with its estimates of where crude will be given the OPEC statement, believe the gross marketing margins could be as well? Because they've been on a bit of a declining trend due to various factors, I admit, but they've been on a bit of a declining trend. Based on your expectations of crude, where do you expect GMMs to settle down to?
You're talking about gross margins for the refineries, right?
Yes, please.
Okay. Now the gross refining margins for...
No, I'm talking about the gross marketing margin, sir.
Now, gross marketing margins is a complaint of end finished product prices. This is the crude product prices. Okay, yeah, the end product prices are supposed to be reflected of the crude prices. Therefore, we don't expect a significant variation in the current marketing margin level, which we are actually gaining to.
So the trend which has been on a bit of a decline with post the OPEC meet, I'm guessing you're saying it doesn't change anything materially.
As of now, we need to wait and watch because this gradual increase in the production also will be gradual over a period of next 2 to 3 months. Plus, we also need to see how the other events like, Iran are getting settled and Venezuelan crisis, as rightly mentioned, how they are going to actually play out in the market, we need to really see. But as far as we are concerned at this point of time, when we maintain a long-range bullish trend only in the range of $75 to $80 for crude oil, at the same time, we don't expect a great change in the marketing margin unless the crude prices very significantly fall short, which the geopolitical as well as other events that are going to unfold in the near time will tell us.
Mr. Ramasamy, one last question, and that's off what OPEC did, but Singapore GRMs too, as I see, have contracted and have been on a falling trend. Could you tell us your thoughts on what the trend is looking like here?
Basically, the Singapore GRMs have cooled off due to gasoline cracks and naphtha cracks, which are a bit depressed. In fact, naphtha cracks are in the range of $2.5 to negative of $1.5 to $2.5, and gasoline cracks from a high of double digit has come to $8 to $9 per barrel. This is due to gasoline and naphtha cracks being weak, and that's basically attributed to higher refinery runs and additional supply coming from China, which is putting pressure on the cracks. So going forward, I think for HPCL refineries, of course, the GRM is, though it is, directionally related, it's not absolutely related to Singapore GRMs, because Singapore GRMs are basically dependent upon the daily crude runs, no inventory holding, no inventory gain losses scenario. So these things put together will play out on the Indian gross margin of the refiners. And therefore, as far as HPCL is concerned, we're confident of returning around $6 to $6.5 per barrel.
Okay, that's a view from HPCL. Let's move on. The much anticipated Idea-Vodafone merger may miss the 30th of June deadline. That's because the telecom department is likely to demand a 4,700 crore before the merger goes through. That's according to a PTI report. Vodafone India had merged its arms into one company, and there are dues related to one-time spectrum charges, it seems. The DOT will ask Vodafone to either clear dues or furnish a bank guarantee before merging with Idea. Market participants have not yet taken this development well. Idea shares have fallen close to nearly 7% in trade today. We'll keep a tab on that. But the other one, Jaguar Land Rover's plans to make petrol models to stay relevant in the European car market. The luxury car maker is also looking to ramp up its production and its dealership network with £4.5 billion investment over the next 3 years. Yatin is standing by with key takeaways of an investor meet of JLR and what they're looking at or what they're forecasting.
Harsha, interesting, investor day at JLR, at their UK, center. More importantly, we had JLR, which has announced a big, £4.5 billion British pound, capital expenditure. Of course, this will be over the next 3 years. Of course, the most important point everybody was watching out for was the guidance relating to the Slovakia plant, in which they have said that the production will start at the end of 2018. Of course, the production capacity will be close to 1.5 lakh units per year, and they said that the new models and lower cost cars will be something that we will be focusing on to improve profitability. So this will be a mix of cost cutting as well as higher volumes, through which they are expecting a strong financial performance moving forward. Also, what they highlighted in the analyst meet that the share of petrol cars is moving up gradually in the EU and in the UK, to do with the fact that there is uncertainty regarding the diesel car portfolio. And also they spoke about how they are looking to ramp up the customer experience via refreshed versions of their new dealerships, and also they plan to up the dealer network from current 1,571 to close to 1,800 in the next 5 years or so. So there will be good addition in the dealership networks. Also, in terms of guidance, they have maintained the EBIT margin guidance at 4 to 7% in the medium term. They are expecting the investment to be close to 4.5 billion British pounds, as I highlighted earlier, and long-term investment range would be 12 to 13% of total revenue. So they want to bring down the total investments moving forward so that they have plenty of that free cash flow which is currently missing. And moving forward, the key challenge that they expect is the weakness in the EU and European markets due to diesel uncertainty. Also, higher incentives are eating into profitability for the US markets, and also they have accepted the fact that the margins and profitability for the company have been below the management targets, and potential unfavorable Brexit outcome or US tariff is something that they will be watching out for in the short term.
Hilton, thank you for that. That's Jaguar Land Rover for you. At a time when state-owned lenders are booking losses on their bond investments, one bank has made money. A contrarian bet taken 2 years ago helped Bank of Baroda beat its peers. Anto Antony of Bloomberg News is here to explain what went right for Bank of Baroda. Anto.
That's right, Harsha. So Bank of Baroda is one bank which has made some money while most of the other state-owned banks have been bleeding on the trade in terms of trading gains. So when we look at it, Bank of Baroda has made around 500 crores in the 6 months to March 31, while the banking system overall has lost about 33,000 crores. So what we are seeing right now, so we were quite interested and we visited the trading floor, we met with the treasury head, and what we realized is that they had put in a trading model in August 2016, which predicted a rising interest rate environment going ahead. So although they haven't shared with us all the formulas which are fed into this model, from what we understand, broadly their model shows that the interest rate environment in India will stick between, at least the yields on the benchmark bond would stay between 7% and 8.25%, with a 25 to 30 bips on cushion on both sides, depending upon factors like fiscal deficit and so on. So they were playing according to this, and they had really loaded upon floaters worth 20,000 crores, and yes, they are making money right now.
Taking that contrarian bet, Bank of Baroda. Thanks, Anto, for that. Rising market borrowing rates have taken a toll on housing finance companies. Stocks have seen a significant correction from their recent highs. But is this just a story of costs, or is this a risk of faltering growth in the sector? That was until recently touted as a multi-bagger. Shraddha Babla is here to take a closer look at the financials of some of these companies. Shraddha.
Well, I'm going to start off by actually showing a table of the kind of correction that we have seen in the housing finance companies' share prices from their 52-week highs. You can see that the stocks have corrected by as much as 48%. What has really led to this kind of negative sentiment for housing finance companies? Well, one of the most important reasons has been the sharp rise that we have seen in the market borrowing rates. So if you pull up a chart where the blue line, the white line that we see, that is the 6-month commercial paper rate and how it has moved. It's risen 75 basis points just in 2018 so far. So what happens is that while the cost of borrowing for housing finance companies goes up, on the other hand, given the current competitive environment for that entire housing finance play, these companies are not able to pass on that higher costs entirely to their customers, and that actually has led to a big squeeze in the spreads of the housing finance companies. Of course, the competition in housing finance space right now is at its peak. Now, if you look at who could be hurt the most, out of all the housing finance companies, LIC Housing Finance has the highest proportion of non-bank or market borrowings. But that apart, you also have the likes of PNB Housing Finance and Canfin Homes, which had actually borrowed huge sums on a short-term basis last year. So all of those will come up or mature this year, and they will have to refinance it at much larger rates. So those are some of the companies also which have seen a significant correction in the share price. Is the spread and rising borrowing rate the only concern? Well, not really. Let's take a look at the loan book growth of these companies for FY18. They seem to be a relatively decent set of numbers. Let's just take the example of LIC Housing Finance though. The loan book in FY18 grew by 15%, but if you dissect that growth, the loan book growth coming from the individual housing loan space was 10%, while the rest 5% actually came from LAP, that is your mortgage loans and developer loans. The concern over here, according to analysts, is that this year in FY19, that support from mortgage loans and builder loans could be much lower, especially given that some of these builders are not really seeing a pickup in the real estate space. So that's one of the concerns. Also, the much anticipated pickup in affordable housing seems to be a few quarters away. We haven't really seen housing projects pick up to the level that you would have expected. And thirdly, there's very high competition, especially coming from new entrants like Piramal Housing. You have Bajaj Finance, which has entered this space, Aditya Birla, etc. And also you have smaller PSU banks, which are really competing tough on margins, because this is probably the only space that they can lend to. Those are some of the risks that the analysts see. What about the asset quality? Well, there are some marginal concerns there as well. Now in FY18, while the absolute gross NPA percentage for housing finance companies may not be really high, but the trend is that of deterioration. So you did see all housing finance companies except for Indiabulls Housing, which actually saw a small rise in the gross NPA ratio for FY18. So those are the concerns, be it spreads, loan book growth, or marginally on the asset quality front. All of these are weighing on the sentiment for the sector right now.
Okay, so very quickly, Shraddha, so are analysts seeing this as a buying opportunity? How do these stack up from a valuation standpoint?
Well, let me answer that by showing the current valuation picture. So if you look at the current price to book value ratios for the housing finance companies as compared to their 5-year average, you will see that the current ratios are trading very close to or above the 5-year average, despite the kind of price corrections that we have seen. And that's probably, of course, to do with growth adjustments that analysts have made. So based on that, analysts do believe that despite the share price correction, some of these concerns that we listed are not really going to disappear anytime soon, and hence they have a neutral view on the sector. We've also pulled up from Bloomberg some data, consensus analyst ratings where 5 would be a buy and 1 is a sell or a bearish view. So HDFC and Dewan Housing Finance are the ones where analysts seem to be most bullish on. So definitely a time to be very, very selective on the housing finance space.
Interesting that, Shraddha. Thank you so much for putting that in perspective. Deep in the jungles of Jharkhand lies a deserted land that was once marked out to build a power project. The 75% write-off that banks had to make for the plant may just be the beginning as the country's power sector continues to reel under financial stress. Anto Antony is back with us to take a closer look at some of those power sector loans and how the risk is likely to be rising. Anto.
So that's right, Harsha. We have had several conversations before also about how the power sector stress is building up. So there is around 2.6 trillion rupees, 2.6 lakh crore is the kind of write-offs that the Indian banks are looking at in this segment. So what we did is that we went to one of these big power projects, which is corporate power projects, deep in the jungles of Jharkhand, to understand these issues and to see how banks are working on resolving these issues. From what we understand, none of the key issues which had popped up earlier or which has push this segment into stress, like not having a PPA in place, in terms of having not adequate call not being there, and the lenders also being very strict and not being very proactive in solving these issues. So all these issues remain even out there. So that's what we understood from our field trip. And the sense is that, so this power project has 4,500 crore in debt, and 75% of it already lenders had written off while they were selling it to RCIL, the asset reconstruction company. So the sense that we are getting is that none of the other major cases are different, and probably the banks will have to take close to 2.6 trillion rupees of haircut over the next 1 or 2 years.
Well, the last we've heard about power sector loans and how bad it is. Anto, thank you so much for joining us with those details. Tata Steel, that's looking to eye more assets in India. The steel maker, which recently completed the acquisition of Bhushan Steel, wants to increase capacity at some of its existing plants. Nikki Mirchandani, who's gone through the annual report, is here with the details. Is it still confident that the JV or the European JV with Tyson Group will happen?
Yes, they are. In fact, they've stated that the joint venture is expected to happen on the date that has been decided upon back in April. They've said that they expect to form the JV with Thyssen Group AG by 2018. That was precisely the deadline that we were estimating. However, in the key risk, they have highlighted 2 bits of it, where they've said that the company failure to realize the benefits of the organic and the inorganic growth plans. This is in respect to the aggressive expansion plans that the company is currently undertaking, be it in terms of expansion of Odisha unit, or for that matter, the acquisition of the stress assets. And also they have highlighted that potential delays or failure of JV with Thyssen Group AG also is one of the key risks that the company currently stands with. In terms of the initiative that the company has undertaken as of now is developing an alternate and new material business. Also, this includes graphene and polymers. Along with that, they would also commence work on ceramics. Besides that, they they are also exploring opportunities for additional capacity at Jamshedpur. This could be done either by debottlenecking or by replacing the old plants with the new ones. And in terms of industry outlook, there they've painted a rosy picture where they've said that the steel demand is expected to grow for India, is expected to grow in the range of 6 to 7%. They see a revival in steel demand with recovery in construction and capital goods space. Also, they say the iron ore fine prices, which is a key raw material used for steel, in the range of around $70 per ton, and that for coking coal prices is expected to be in the range of around $195 to $198 per ton. Back to you.
Okay, thank you for that. We'll slip in a break on that note. On the other side, Erdogan becomes the longest serving president of Turkey. More on that story on the other side.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Back on lunch, the headlines at this hour. Markets start the week on a subdued note. Nifty hovers around 10,800. Broader markets outperform. The Chinese central bank cuts down the cash reserve ratio to be maintained by some lenders, freeing up more than $100 billion to enter the system. Recep Tayyip Erdogan seals his position as the longest-serving president of Turkey. After a week-long pause, Mumbai continues to receive heavy showers through the weekend, resulting in waterlogging and traffic jams. Quick check on the markets, a bit subdued as I mentioned. Agam is here with some of those key movers.
Right, well, we have seen a little bit of weakness starting to seep in over the last half an hour or so. If you pull up the intraday graph of the Nifty and the Sensex, as you can see, they are edging downwards. Let's also take a look at some of the key movers and well, you know, in terms of the turnovers right now, when it comes to the cash markets, largely average turnovers, not too much to speak for. When it comes to you know, NSE cash specifically, a little less than 15,000, and it's the same for the F&O too. Despite the fact that we are moving into expiry, that number of turnovers on the F&O space is likely to increase as we move into the next couple of days. That said, while it has been weak, the broader markets are not doing that badly. They're outperforming, as a matter of fact, marginally in the green when it comes to the mid-cap index. Small cap also largely flattish for now. Two sectors which are standing out in today's day of trade is the Nifty IT index and the pharma index, and in both these cases we only have one or two stocks which are actually keeping these indices upwards. But in terms of the big gainers in today's day of trade, we have a lot of strength coming in Ultratech Cement, and that's followed by Bajaj Finance. Bajaj Finance continues to move upwards, in fact up as much as well nearly 2.32% at day's high, as a matter of fact, right now. And we have seen some good gains in Vedanta as well, and Infosys, of course, from the IT pack, keeping the index higher. But on the whole, it's been a very quiet day of trade when it comes to the cash markets, Harsha.
Thank you for that. International politics. President Erdogan declared a decisive victory in Turkish national elections yesterday, lengthening his 15-year grip on power and granting him vastly expanded authority over the legislature and judiciary. Bloomberg's Ben Holland has a detailed report.
Well, I think it is more sweeping than was expected. There were two elections going on. One was for the presidency, one was the parliamentary vote. And beforehand, opinion polls had suggested that Erdogan might not win the presidency, at least in the first round of voting, where you need 50%, and he did. And the opinion polls also suggested that his alliance might not win a majority of parliament, and it did. So from that point of view, it was a better result than expected. I guess the only drawback from Erdogan's point of view is that his own party didn't win a pure majority in parliament. The coalition that it's part of did, but he's now kind of dependent on a partner in a way that he wasn't before. So that's a slight drawback, but it was a pretty sweeping win. Before the election, the lira, there was a serious run on the lira. It lost 20% of its value in a few months. The president resisted raising interest rates, and then he kind of conceded that point to the central bank in the last few weeks, and the central bank did raise interest rates. But Erdogan was saying that after the election, he would take personal and direct control of interest rates. And from everything we know about what he feels about interest rates, that means that they won't be going up anytime soon, because he has consistently argued that lower rates are needed for the Turkish economy, which is the exact opposite of what most economists say.
Sunday was a historic day for the women of Saudi Arabia as the kingdom finally removed the infamous driving ban. Women hit the road in celebratory packs, whooping with joy. According to a government release, more than 120,000 women have applied for licenses, and a handful of driving schools that serve women have month-long waiting lists. China's central bank reduced the amount of cash that some lenders must hold as reserves. This unleashes about $108 billion of liquidity into China's financial system. Stephen Engel reports.
It's a very targeted injection of liquidity. As you said, 108 billion US dollars, 700 billion yuan in two forms, really. You're looking at the top banks, the big five, plus about 12 joint stock commercial banks. They have strict marching orders what to do with the 500 billion yuan, about 78 billion US dollars that is going to be freed up. And that is, they must take part further on the path of reform in this debt for equity swap at troubled larger state-owned companies. It's something the banks have kind of reluctantly had to comply with, given that this is a policy lending, if you will, these big state-owned banks. But again, the authorities needed to inject some liquidity, cut back the required amount of reserves that these banks keep at the central bank, but at the same time participate more in the debt for equity swap. Now, also, there's going to be another 200 billion yuan, or about what's that, 30 billion US dollars at smaller local lenders to inject into small to medium-sized enterprises. And the concern here is, of course, growth concerns. You have the trade friction. You also have signs of a slowing economy with deleveraging. So the central bank is, as expected, adding some liquidity, but very targeted liquidity.
Okay, from China, let's talk about viewership back home. The BARC, or Broadcast Audience Research Council, has released viewership ratings for the month of June, and there are some big changes in the league tables. For the first time this year, Zee has toppled Star for the top spot. Sun TV's dominance in the south is slipping, it seems. Darshan is here with a broader trend of what's going on and where the shift is coming from. Darshan.
Yeah, so if you're looking at what exactly has happened, the viewership trends are out, and at least in the data for the past 1 year, this is from Jan to June, but if you take a look at the data that went backward to all the way to June, it's for the first time that, Zee has overtaken Star. So the viewership of Star has been in the range of 30%. It's dwindled down to 24%. For Sun TV, it's been rather weak. From 15%, it's come down to 9%, while others like Sony and Viacom, it's been rather stable at this point of time. The others are much higher. So the battle pretty much continues for the top slot, and Zee has taken it at this point of time. Now, in terms of, why do these ratings ratings matter. A lot of advertisers look at this rating to give their ads, and ads form almost 60 to 70% of the top line for companies in the media space like a Zee or a Sun TV. So that's why this is extremely important for them. Now, how do you break up Zee's audience? Regional has gone up significantly from close to 9%, it's moved up to 11%. Hindi GC and Hindi movies continue to remain strong for them. So it's the regional news that has gone up for Zee this time around. Now, basically, what has happened for Zee is the fact that gains came in from the rural market. The urban share was rather stable. Zee Marathi, they had lost almost 5 percentage points, but that was made up because of viewership gains in Tamil, Telugu and Bangla stations that they had. So that is something that worked for Zee this time around. What is CLSA saying? On Zee, every 1% point growth in ad revenues to boost earnings by almost 2 percentage points. So that's the bottom line and top line impact for Zee TV. Now coming to Sun TV, where it has been losing market share. From 15% it's moved down to 12%. Tamil continues to have the maximum share. Telugu, Kannada and Malayalam are the other channels where they have share, and it's mainly a regional channel, so that they have shares here. Now basically what has happened is that their flagship channel, Sun TV, the one in Tamil, is actually, the share has fallen to 42%, which is the lowest ever. And Sun network share in Tamil Nadu market is down from 71% to 56%, given the fact that competition is coming out very, very significantly. And with the launches of new channels in Tamil, this share could also go in even lower as per brokerage reports. So that's what happened as far as Sun TV is concerned. Apart from it, valuation wise, Sun TV continues to trade at a significant amount of discount. Zee is almost at a 30% premium to Sun TV, both on an FY19 and FY20 basis. And mainly because of strong growth, strong avenue and leadership, Zee continues to command that premium. But one of the key reasons why Sun TV always trades at a discount is the fact that its affiliation to politics and the impact of any kind of political news that will have an impact on the share price.
Darshan, thank you for that. That's the viewership data on Zee and Sun TV. Myntra, meanwhile, has entered a tough market to crack. The launch of smart wearable device Blink Go, the Walmart and Flipkart back e-tailer, will be taking on smart wearables from Apple, Samsung, Xiaomi, Fitbit and even Titan. Nishant caught up with Jayendra Venugopal, the Chief Technology Officer of Myntra, to understand how the company plans to make this work.
In terms of this particular fitness band's features, right? So we have built some of the best-in-class features, the highest quality sensors at a price point that is extremely competitive with respect to any of the other fitness band manufacturers that you have looked at, right? So we've paid a lot of attention to the styling of the device. Like, it comes with the black and the silver/chrome finish. It has a very, very high quality touch TFT display, color TFT display at this price point, which you normally don't see. And on top of it, we have built an app which we think provides very, very good way to visualize and create insights on various things related to your fitness, right? So those are some of the things with respect to how our brand and our band is actually differentiated from the products in the market. For example, even the font that we have used in the device, right, has been custom created by us for this particular device. We have not taken off the rack fonts and used it as is, right? So it's like a lot of detailing has gone into the design of the product, right from the bottommost layer, the infrastructure, the operating system, to the hardware component integration, to the software, right up to the app interface for the user and all of that. And of course, going back to the most important element of the band, it is the wearables platform, right? So the platform vision is very exciting. So we think that we can empower a lot of independent developers, device manufacturers who may not have the ability to create their own underlying like a real-time operating system or something equivalent, right? Or going to be licensing some of the big Wear kind of platforms that are available, etc.
This is just a start. You have host of products in a different category lined up. Tell me about that. What kind of products is Myntra going to build now?
Yeah. So just to give you an idea of some of the things that are in the pipeline. They're in the oven at various stages, right? Some of them are in the conception stage, some of them are more in the initial prototyping or advanced prototyping stages. But we are actually going to be coming out with also a smartwatch. Again, you can think of it as a watch that is like a no compromise watch. It will have the best in class features that you will find in the most industry leading category manufacturer out there, but at a very, very competitive price point, plus some more features that we are looking at adding to it, right? So that is one. We are also looking at insert smart shoes, for example. We are looking at an intelligent headphone, for example, that has a MWP and so on, right? So these are some of the things that are in the pipeline. Of course, even more further out, we are in the very early stages of doing some core R&D into biosensors and how to embed biosensors into fabrics. Of course, some of our private label brands are the largest brands today in the country, largest, fastest growing brands in the country today.
Right.
So we do think that introducing the element of smartness to apparel is definitely something that we are very interested in.
Right, I just want to understand, Myntra has always been a fashion platform. Why the need for being smart?
I think in this day and age, I think every industry is evolving towards how to do things better, and being smart is the way we think we can add even more value to our customers, right? So, and like I said, it's not about creating a new line that is disconnected with the rest of our core philosophy, right? So we think of, we think of lifestyle and fashion as a holistic category, and apparel, fitness, wearables, etc. are clearly in consumers' mind part of that ecosystem, right? And we want to be where our customers are, right? We want to be the ones that are providing best-in-class products for them, and therefore it clearly makes sense for us to be in this space.
Interesting move on Myntra, but let's talk about the weather. There's been a revival in monsoon and it's making a steady advance towards central and northern parts of the country. According to the Met Department, conditions are becoming favorable for pre-monsoon thunderstorms. Earlier today, we spoke to private weather forecaster SkyMet to understand how the season is likely to shape up.
Central India is also gearing up for heavy rains. Already South Gujarat and West MP, clouding is there, and weather system is moving towards that area, and we expect heavy to very heavy rain over western parts of MP, South Gujarat, and some more parts of South and East MP in a couple of days. And gradually this weather system will move towards northwest plains, and by 28th or 29th, we expect that rain will cover many parts of MP, West MP, and UP, as well as Delhi and NCR.
Would it be disruptive rains, Mahesh, in certain pockets, or is this much desired that a lot of country which probably didn't have the adequate rainfall until now will actually start getting it? How is your reading?
Yes, because monsoon is late over UP, MP, and Bihar. And it will be on time because normal date of Delhi and NCR is 29th of June, and we expect that northwest plains will start receiving rain on time, but they were devoid of pre-monsoon activities, which are very much essential. But now the heavy rains are expected over parts of South Gujarat and West MP, adjoining parts of West MP, but other areas will receive scattered rainfall, and the rain deficit, which has cropped up till now, it will gradually reduce. By the end of month, we expect that June will end at par.
Interesting. And just wondering, is it possible to predict now what would this mean for the overall season?
Yeah, overall season, as we have predicted that monsoon rain will be 100% of LPA, long period average, and with an error margin of plus minus 5%. So we expect that now good rains will continue till at least 12th of July, because MGO is also active, and thereafter there may be a slight deviation in rain intensity, but on and off rains will continue, and we expect that July and August will be at par, and rain will again increase in the month of September. So overall rainfall will be near normal.
All right, that's out of time on this show, but coming up next is a special conversation with Vijay Iyer, COO and Vice President of MEGA, a part of the World Bank Group. That's coming up on the other side.